We're here on the USDCAD 240. This is a potential triangle I've got involved with. I will run through the higher time frame analysis. I think it's important that I just mention within these trades that I always try to get in at the earliest possible time, and that is usually the middle point where we are at the moment. It is aggressive because the pattern hasn't formed yet. We haven't gone up to here and broken structure, and we haven't seen a pullback. And the problem for me in doing that is that the majority of the time these breakout patterns break out. That's why they're called breakout patterns. We see a big rally, and it's not often that you get it just break above here, then a pullback and get a nice entry. You would need like a double bottom to occur like this and then get involved, because otherwise without this double bottom your stops has got to go here. Certainly that's where my stops are going, just here. In fact, you can see where they are at the moment. So for me, if I want the opportunity to trade these breakout patterns, I have to be more aggressive with the entry. But in being more aggressive with the entry, I have to then be conservative in other areas. And one of the ways is also being conservative with the entry, and hopefully when I run through this high time frame analysis I'll be able to clarify that a little bit more. Aggressive on one hand, not so aggressive on the other, and it's the best I can hope for if I'm being aggressive like I am in these potential patterns. So USDCAD, here we are again. If you remember, we had our flag pattern which came 6 pips from targets and did not hit. Thank you very much. And what we then did is we pulled back, we put in a new low, and we pulled back again. Now, first thing that my eye is always drawn to is we are moving sideways. When we move sideways, what I'm looking for then is potential breakout patterns. What also catches my eye is this is quite a nice rally. You can see here we've got quite a few nice bullish candles and then sideways movement after it, and we have not yet come up to retest the closes of the candles. If I leave my crosshairs on there, you'll see this wick did not get up to this point. Now what I can see also is we have a high and tight flag here. This is how it looks for me. So this is valid here on the daily time frame, but I can't trade this pattern on the dailies, it's just too big. So what I do is I drop down to the 240 and I take a look at it, and if I just delete everything off, we do not have a high and tight flag here. The 240 doesn't look anything like a high and tight flag, but here's one thing to bear in mind. These breakout patterns, particularly high and tight flags, triangles and wedge patterns, can very easily turn into one another. So we saw that as a high and tight flag like this, but here we do not have it, or in actual fact if you put it there we violate. So it's not a high and tight flag here, but the top is still valid for me. The move, the rally, is still valid for me. Quite importantly, we violated this level of structure here on the 240. Now, it's not the outside return, but here on the 240, it's a major level of structure. What we can then do is say, well, could this then be a wedge pattern? And if it's a wedge, how do I get involved down here? Well, I need conservative entries. I need multiple higher high, higher closes. I need it to be in trend. I maybe need a double bottom. I maybe need a 2618. I maybe need a head and shoulders. So there's a lot of maybes there. So if we take a closer look at this, the first thing I'm noticing on the 240 is that we are kind of arching here, and there is a possibility then on the 60 that this was a double bottom. One other thing I'm looking at is this candle right here. This is a indecision candle, but look where we closed. We closed at higher than the 50% mark, indicating we pushed down, but the bulls pushed all the way back up. Look at the candle before it. It was a higher high, higher close, indicating here there is some buying pressure. Let's go ahead here and put a structure level on right at this point, and just look left for any other structure that we have here, and we can see we've got a test, we've got a test, Not a great deal. There's another one there. So not a fantastic area, but an area where we've certainly seen a reaction in the past, and we could see that reaction again. And certainly with us breaking above this point and the higher high, higher close and that rejection candle. Then as we drop down the 60, this is where it really gets interesting. This is what I was paying attention to on the 60. Look at what we have done here. I'm just going to fatten this up a little bit. So test, test, test. 3 tests. Just like that. And you can clearly see we've got gaps in between these. And then we had the break above, close above, and guess what we have with any double bottom or triple bottom? We see a pullback for a 26.18 trade. And there we go, you can see we've come down into that 61.8. Now, I wasn't aggressive, I waited, and I went to the 5 range and I waited to see if we saw some kind of hold. We got the hold, so I got in late with this trade because I wanted more confirmation. And so if we go down to the 5 range, you'll actually see what I mean. So now you get an idea of what I mean when I say I'm being aggressive in one hand, but I'm being conservative in another. And here you can see we had the test low, we had a higher high, higher close. I use that as my entry. So let's just go back to the 60. So we've got our entry, we've got stops. Stops very simple here. We've got a triple test bottom, so they go an ATR below the low. I actually need to be one more pip lower, so there we go. And if we look at this and say that it is a triangle or it is a high and tight flag based on the dailies, it really doesn't matter because my targets are still the same. They run from the swing high to the swing low, and we look for that 127 fib. Now, if no, I don't need to talk about that. Okay, so let's just zoom out a little. One problem here I am noticing is this. This is the tops of our structure, and you can see that my target is above it. Now, when we're this close, it isn't that much of a big deal because if we can get up to here, what happens is you can easily get a spike through that takes you out for your target. So even though we're shooting just past structure, we can easily get that spike up there. So I'm not too concerned. One other thing is as well, I was thinking of playing for an extension here, and it's not very often you hear that from me on a breakout pattern, but we have this potential head and shoulders, and we could play for a retest. But the problem is, because again, like I said, we could just spike through here to hit our targets. If my target was up here, and it would be unlikely we get a spike that big, we'd actually have to close above this area. That would indicate then that we could go higher. So that's a little bit too aggressive for me, so I'm not looking at that at the moment. That'll be a different trade that I'll enter in if we do break above that structure level. So that is the trade. We're just about to have in 5 minutes the 4-hourly candle close, and if it closes like this, this will be a very good sign because, like I mentioned at the start of the video, we've had the higher high, higher close, higher high, higher close, indecision candle, but we closed in the upper probably 60%, indicating that there's more buying pressure than selling pressure. And if we get something similar like this now, or even a positive candle, this will be a really good indication that we're going to go higher. So let's work out the risk to reward, because I think I pretty much covered all the bases there, particularly since I've been talking for 9 minutes. Just one thing here on targets. I am front running by 8 pips, and targets are at 133.98, so that's just 2 pips before that psychological number, but I'm front running by 8. So the risk is looking like this. The reward is like this. And we're looking at, in terms of risk, 38, so a bit more risk than I wanted, but again I waited for additional confirmation, and 138 there, so we're looking at just over a 3-to-1 risk to reward on this trade. And I'll set an alert to see if we can get up to the tops here, maybe come back, do another part of the video, and then hopefully go and up to hit those targets. We're back, and I have now been stopped out to this trade for minus 38. What a real shame. I do want to just talk through the 240. So okay, here on the 240 it was looking quite nice. We had these higher high, higher closes. I spoke about this indecision candle, but we actually showed more buying pressure. The next 4 hourly candle, look at this one, a lovely hammer. We had a higher high, higher close here as well, more of an indication here that we could be going higher. And then the next candle, big old bearish drop, violating that 60-minute triple test. So very good opportunity for me. I'd take that trade again and again. Just unfortunately this time we got all the right signals, we just failed to get the follow through, so out for 38.